The chair sees no other members who have opening statements. Now it is my pleasure to introduce panel one this is a two-panel hearing, and panel one consists of the Honorable Michael Barr, who's the Assistant Secretary for Financial Institutions at the Department of Pleasure. We want to welcome Mr. Barr back to this committee once again. And also joining him at the witness table is someone who is very familiar to this subcommittee, the Honorable John Libowitz, who is the Chairman of the Federal Trade Commission. And Chairman Libowitz, we certainly welcome you back again to this subcommittee. It is the practice of this subcommittee now to swear in the witnesses. So I would like for you, each of you, to stand and raise your right hand. Yeah. Do you solemnly swear to tell the truth, the whole truth, and nothing but the truth? Let the record reflect that the witnesses have answered in the affirmative. Now we want to recognize, beginning with Mr. Barr, the witnesses for an opening statement. You have 5 minutes or thereabouts for your opening statement. Thank you. All right. Mr. Barr, you're recognized for 5 minutes or thereabouts.
Thank you, Mr. Chairman, and thank you, Ranking Member Radonovich, for providing me with this opportunity to testify about President Obama's proposal to establish a new, strong financial regulatory agency charged with just one job: looking out for consumers across the financial services landscape. As Secretary Geithner has said, protecting consumers is important in its own right and also central to safeguarding our financial system as a whole. We must restore honesty and integrity to our financial system. That is why President Obama personally feels so strongly about creating this new Consumer Financial Protection Agency. I understand the committee's concerns that have been expressed today with respect to boundary issues, jurisdictional issues, and the role of the FTC. I think as we work together on those issues, it's important to keep in mind the central goal we all share: having one agency for one marketplace with one mission, protecting consumers. The new agency will have the authority and the resources it needs to set consistently high standards for banks and non-bank financial providers alike, to put an end to regulatory arbitrage, to put an end to unregulated corners of our financial system that inevitably weaken standards across the board. This agency will be accountable for its mission, yet independent. It will have a wide range of tools to promote transparency, simplicity, and fairness. It will act in a balanced manner, considering costs as well as benefits, in a way that protects consumers from abuse while ensuring their access to innovative, responsible financial services. It will be able to reduce regulatory burden while helping consumers. For example, by creating one simple mortgage disclosure form for all consumers to use. It will not set prices for any service. The federal government has failed to date in its most basic regulatory responsibility, utterly failed to protect consumers. The deep financial crisis that we are still in, let me emphasize that we are still in today, revealed the alarming failure of our existing regime to protect responsible consumers and to keep the playing field level for responsible providers. Instead of leadership and accountability, we have had a fragmented system of regulation designed for failure. Bank and non-bank financial service providers compete vigorously in the same consumer markets, but are subject to two different and uncoordinated federal regimes, one based on examination and supervision, the other on after-the-fact investigation and enforcement. Less responsible actors are willing to gamble that the FTC and the states lack the resources to detect and investigate them. This puts enormous pressure, too, on banks, thrifts, and credit unions to lower their standards to compete and on their regulators to let them. And no financial provider should be forced to choose between keeping market share and treating consumers fairly. This is precisely what happened in the mortgage market. Independent mortgage companies peddled risky mortgages in misleading ways to borrowers who could not handle them. To compete, banks and thrifts and their affiliates relaxed their standards on underwriting and sales, and their regulators were slow to act. The consequences for homeowners were devastating, and our economy is still paying the price. Fragmented regulation facilitated abusive credit cards. Tricks and traps enabled banks to advertise selectively low annual percentage rates to grab market share and boost income. Other banks could not compete if they offered fair credit cards with transparent pricing, and consumers ended up with retroactive rate hikes and unfair terms. The list goes on and on. Credit unions and community banks with straightforward credit products struggled to compete with less scrupulous providers who appeared to offer a good deal and then pulled a switch on the consumer. Our federal agencies do not currently have the mission, structures, and authorities suited to effective consumer protection in consumer financial markets. The FTC has no jurisdiction over banks, and it does not have the supervisory and examination authority to detect and prevent problems before they spread throughout the market. Mr. Chairman, I see that I will be significantly over my time. Could I take several additional minutes?
Yes, you so approved.
Thank you.
You're on your thereabouts part of your testimony.
Thank you. Bank regulators have supervisory powers over banks, but their primary mission is to ensure that banks are safe and sound and not to protect consumers. Consumer protection supervision is never going to share the front seat with safety and soundness. Tinkering with the consumer protection mandates or authorities of our existing agencies cannot solve these structural problems. We need a structural solution. We need one agency for one marketplace with one mission to protect consumers of financial products and services and the authority to achieve that mission. That's the agency we are proposing to create. The CFPA will have the sole mission of protecting consumers. It will write rules, supervise institutions, examine them, and lead enforcement efforts for the whole marketplace. The implications for our proposal for consumer protection and competition are enormous. The proposal will bring higher and more consistent standards, stronger, faster responses to problems, the end of regulatory arbitrage, a level playing field for all providers, and more efficient regulation. Our proposal gives the agency the power to strengthen mortgage regulation across all lenders and brokers. It can strengthen disclosure, make it easier for consumers to choose simple products, prevent lenders from paying yield spread premiums that pay brokers more if they deliver loans with higher rates than consumers qualify for. The agency would implement credit card protections and update these protections as markets change. And it would set high national standards for licensing, bonding, monitoring of all non-bank financial services providers. Let me say, the FTC is a good agency. The chairman and I are good friends. Our legislation does not affect the jurisdiction of the FTC over the vast array of non-financial markets and actually strengthens its ability to police those markets. To increase the FTC's ability to protect consumers, we propose that the FTC be able to adopt rules to prohibit unfair or deceptive acts or practices with standard notice and comment rulemaking, to obtain civil penalties when companies act in an unfair or deceptive way, and to pursue those who substantially aid and abet providers that commit unfair or deceptive practices. The administration also supports increased resources for the FTC so that consumers can be better protected across all markets. As for financial markets, the FTC would continue to have authority under the FTC Act to pursue financial fraud without delay, including on foreclosure rescue and loan modification scams. The FTC will retain authority for writing rules under the Telemarketing Sales Act and concurrent responsibility for enforcing them over financial products and services. And the FTC would retain primary authority in the area of data security for non-bank entities. In addition, the FTC would have backstop authority to enforce the same consumer credit statutes that it can enforce today. Under that authority, the FTC, or frankly a bank regulator, could, if it becomes aware of a possible law violation, refer it to the new agency, and if the new agency doesn't act, take action itself. That same referral requirement will apply to the bank regulators, and it is designed to ensure a consistent federal approach to interpreting and enforcing our consumer protection statutes. Finally, let me just say this. It is time to put consumer protection responsibility in an agency with a focused mission and comprehensive jurisdiction over all financial services providers, banks and non-banks alike. It is time for a level playing field for all financial services providers. It is a time for an agency that consumers and their elected representatives can hold fully accountable and responsible for consumer protection in all financial sectors. And it is also long past time for a stronger FTC. The President's legislation fulfills these needs. Thank you for this opportunity to discuss the proposal, the additional time you have graciously given me, and I will be happy to answer any questions at the conclusion of our opening statements.
Mr. Chairman, I would like to make a unanimous consent that the gentleman from the FTC have 9 minutes.
I believe I'll be giving back at
The chairman of the FTC would take whatever time he may consume.
We've been having a little problem with the microphone. Chairman Rush, Ranking Member Radonovich, Vice Chair Schakowsky, members of the subcommittee, I appreciate the opportunity to be here to discuss consumer protection regulatory reform, including President Obama's far-reaching proposal to enhance consumer protection through the creation of a new Consumer Financial Protection Agency, the CFPA. As all of us in this room know, and as many of you on the panel articulated, and as Mr. Barr also effectively articulated, the need for reform has become as painfully clear as the distress that consumers are now experiencing in these difficult economic times from the failure of regulation. All of us on the Commission support the President's goal of elevating consumer protection, although some of us have different views as to the best means to that. Thank you so much. You see, we are good friends. Although some of us have different views as to the best means to that end. For my part, this initiative, which enhances the resources and authority for the FTC and which creates the CFPA, is clearly preferable to the status quo. In any case, the Commission will continue to vigorously protect consumers of financial services while this proposal is under discussion. CFPA, if it's enacted, is ramping up. Beyond that, we look forward to working collaboratively with the new agency. Thank you so much. Now I feel like I'm at a press conference. In the last 5 years, we've brought more than 100 financial consumer protection cases and have recovered nearly $500 million in the last decade for consumers. Since I last testified before the subcommittee in late March, we've continued aggressively pursuing financial predators, bringing 14 new cases in this area. In fact, today we're announcing distribution of an additional $8 million in consumer redress checks to Americans who were deceived by deceptive mortgage origination fees. And on June 1st, using the new APA rulemaking authority that you gave us in the Omnibus Appropriations Bill, we began our rulemaking addressing mortgage modification and foreclosure rescue scams, which have become, as all of you know, all too common recently, and also addressing the entire mortgage life cycle, advertising, origination, appraisals, and servicing. Simply put, this work will help ensure that consumers aren't ripped off by bogus mortgages or false advertising. Mr. Chairman, President Obama emphasized the importance of giving the FTC tools and increased resources, the ones that we need to stop practices that harm consumers and violate the law. First, the proposal grows our agency, giving us the staff that we need to do the job that you all want us to do. Currently, we have just over 1,100 FTEs. That's down from about the 1,800 FTEs we had in the late 1970s and early 1980s, despite a considerable growth in the U.S. population and in our own responsibilities, including enforcing canned spam, do not call, COPPA, the Children's Online Privacy Protection Act, Gramm-Leach-Bliley FACTA, and other statutes. Second, the proposal provides the FTC with APA notice and comment rulemaking, which is used by virtually every other agency in the federal government. It would strengthen the Commission's ability to address widespread problems more quickly. Third, the proposal authorizes the FTC to obtain civil penalties for violations of Section 5 of the FTC Act. This new power, we believe, would help deter would-be violators and help consumers help protect consumers more effectively. I think something like 47 state attorneys general have fining authority. And by the way, fining authority was originally proposed by Caspar Weinberger when he was chairman of the Federal Trade Commission under President Nixon in the early 1970s. Finally, the proposal authorizes the FTC to go after those who aid and abet others who violate the law. We'd also urge Congress, as you consider this legislation, to give both the FTC and the CFPA the ability to bring civil penalty actions on our own, which would put both of us on equal footing with other consumer protection agencies like the SEC and the CFTC, and not make us, as we do, currently have to wait for the Justice Department to clear our going forward. Now, we expect that, as with any bold and complex new initiative, clarifications will be worked out as the legislative process moves forward. But from my perspective, the President's goal of streamlining the overall system for protecting consumers from financial abuse is more than commendable, and eliminating the balkanization of consumer protection oversight over non-banks and banks, as Mr. Barr has alluded to, is laudable and very, very critical. We do have some concerns, however, about the draft legislation, or the legislation in its, as it was initially drafted, although I'm optimistic that we can work these out as the legislative process moves forward. So, for example, the proposal states that the FTC would have backstop authority, but the draft legislation imposes a review period that could require us to wait 120 days before filing certain cases. We also believe it would be helpful to make definitions of the proposal's terms, such as credit and financial activity, clearer. And let me tell you why with an example. So suppose the FTC finds a telemarketer making illegal robocalls to millions of consumers on the Do Not Call registry, urging them to purchase something like advance fee credit cards, which are, I wouldn't say per se illegal, but almost always, but let's say often illegal. And suppose that a payment processor participated in the fraud. It is critical that we be able to bring an action against all of the malefactors expeditiously. But it's unclear under this draft whether we'd have the jurisdiction over the telemarketer offering the financial products or the payment processor, and if so, whether the 120-day waiting period would come into play. Now, we've made much progress with Treasury on several of these boundary issues, and we're continuing to make progress. But getting this right and allowing us to put an immediate halt to harmful practices is crucially important. Having said that, with this committee involved in writing any legislation, I am confident that this very, very important initiative will be considered, discussed, clarified, and refined, with all open issues resolved in favor of American consumers. We understand, of course, that under this proposal, rulemaking authority and primary enforcement responsibility for financial products and services would go to the new agency, but we will continue to aggressively enforce these laws as a cop on the beat where necessary, as well as each and every other consumer protection law within our jurisdiction. We look forward to working with the administration and Congress to reach a plan that best protects American consumers, and I thank you for your time.
The chair
Happy to
thanks,
answer questions.
yes, the chair thanks the gentleman, the chairman of the FTC.